it looks like they'll probably book about a $10 billion gain on their investment. Now, we don't know their cost, but it looks like to be probably around $2 billion, as you said, worth 12. So they're going to book $10 billion gain. I mean, that offsets the disaster of WeWork, only a few quarters ago, and likewise the write-downs that they took, for the COVID impact. So suddenly Masa goes from losing to being a hero very quickly. And I think what the market's realizing today is there's more behind it. There's more companies coming out of the Vision Fund that will IPO in the coming quarters that actually end up being positive for the Vision Fund's investment valuation.
And if I could take you to take a step back and take a very macro view on SoftBank this year, how would you characterize the strategy, if there has been one overarching long-term strategy for 2020?
Yeah, look, I mean, I think there's probably, I'd say probably two things. The fact is the company has, over $250 billion of assets, but equity value is $120 billion. There's a huge gap. And so its strategy has been sell some assets and buy its own stock, retire debt. That's one. And the other is continue its investment from a both listed point of view, introduce listed investments, the investments in Facebook and Netflix and so forth, but also to continue to invest in private equity through the Vision Fund 2. And so I think the bigger picture for them is they're frustrated with the discount, as have been shareholders. Now, this has obviously had a big change. They've started selling assets, obviously realising T-Mobile, realising SoftBank Corp in Japan, and some of Alibaba as well. And so it's really the strategy of how do they continue to invest? That's one. But two, how do they ensure that shareholders get that value that otherwise the market is not recognising yet?